Well, the crypto market is down about 1.8% as of the recording of this video. I'm going to give you the exact reason it's down, and it's actually a big surprise. It's actually kind of a shock. We got a report that we were not expecting, and I'm going to exactly explain to you what this is and how it impacts crypto and how it impacts kind of the landscape, because you need to know this. This is very, very important. Thank you for your support. Hit that subscribe button and please hit that like button and just tell the algorithm that we're here. Okay, so here's what's going on. So like I said, market's down 1.8. This is not too bad, crypto being down this much, but again, we just got the U.S. jobs report, and it was a shocking report. So it's not what we were expecting. So it's going to impact crypto for a while now, probably today, tomorrow, into Sunday, and maybe for into next week. So this is what's going on. Okay. So again, Bitcoin, Ethereum, I'm going to show you the report here in just a minute. Okay. Bitcoin, Ethereum doing their thing down about 2% each respectively. Everything is flat. Let's see what we got. Yeah, Polygon's down 3, Solana down 2.5. Polkadot up 3. Must be some good news going on for them. And SHIB is defying the odds and is up 2.5. Okay, so here's what's happened. So the U.S. economy added 517,000 jobs in January, which was a massively shocking big number compared to what the number they were expecting. Okay, and so this blowing past expectations in the first month of January, or in the first month of the year, it basically is showing that inflation fighting monetary tightening by the Federal Reserve is not really working as much as they thought it was on the job side. Now, when you're talking about inflation, there's two sides of the coin. There's the CPI, the consumer price index, which shows what prices are and all that kind of stuff. And that's the number we focus on. But this jobs report is a big deal too. Okay. In fact, Chairman Powell talked a lot about jobs and the labor market in his speech on Wednesday. Okay. So basically this jobs report is showing that, that it's not cooling as much. So look, this is what they were expecting. They were expecting 188,000 jobs to be added. There was 517,000 jobs added. Massively shocking big number. Okay. And again, so just continuing down here. So if you're like, well, what does this have to do with anything like Austin? This does have an impact. Okay. Because this is why crypto is down right now. Okay. This is absolutely why crypto is down. Okay. Here we go. Look. So Friday's shock numbers. So the number that came out today, that number, that 517,000 number. Okay. Marks a sharp jump from the prior month, which saw payrolls rise by basically they're saying in December, payrolls went up 260,000. Okay. Shop payrolls. Yeah. Okay. January's figures come just as the employment picture began to show some signs of moderation. Because what the Fed wants to see is they actually want to see the labor market cooling off. Basically they want it to be, they don't want the labor market to be this hot. Okay. So with monthly data on downtrend in recent months. Okay. So basically the data in the last couple of jobs report has been showing it down, but this is the key. They want it to be moderate. They want it to not be as hot. And with adding 517,000 jobs versus the expected 188,000, that's the big shocker. Okay. There you go. All right. Now, so let me show you. So look, we know this, like the Fed Reserve has raised the base interest rate 8 times, 7 in 2022, and 1 time basically 2 days ago on Wednesday for an accumulative 450 basis points. They did this to tamp down, or to kind of, push down tremendous strength in the labor market that has placed upward pressure on wages and contributed to stubborn inflation. There's the key. Okay. Just continuing down. Tightness in the labor market remains a key component of the Fed's inflation. They want that labor market to not be growing as fast as it is. Okay. Powell, who's the chairman of the Federal Reserve, said the labor market continues to be out of balance and that reducing inflation is likely to require a period of below trend growth and some softening in labor market conditions. Look, this is the final thing. It's difficult to see how wage pressures can possibly soften sufficiently when jobs growth is as strong as this. And it's even more difficult to see the Fed, here's the key, listen, to see the Fed stop raising rates and entertain ideas of rate cuts when there's such an explosive economic labor report coming in. So what this basically comes down to is this. On Wednesday, we were told we probably would only get 2 more interest rate hikes. It would probably be March and May, and they would probably be 25 basis points. He didn't say that, but that was kind of the expectation. With this jobs report now coming in vastly hotter than expected, we were expecting 188,000 jobs to be added. It was 570. What was the number? 500 a lot. It was 500 something 17. 517. Yeah. So they were expecting 188. They got 517. So that's showing that it's not slowing. Okay. So this sends a signal that, look, we may end up going back to a 50 basis point raise in March or something like this. It just shows that inflation is still not dealt with. This is not great. Okay. So that's what's going on. That's why the crypto market is down. And this is a very shocking number. That's what I got for you. I'll be here as always. See you.